Time now for some business news, and let's cross straight to Hong Kong now to speak with Jameel Ahmad, Chief Analyst at GTC Group. Jameel, how are markets faring today?
Actually, we have a little bit of a glass half full moment for global markets if you look at what's really happening in the global stock marketplace. That's because the PPI from the United States, that's the producer price index yesterday, it came in slightly hotter than expected at 0.5%, but the data from the previous month got revised down. So what does this mean overall is that inflation still remains somewhat elevated and high for the United States economy, perhaps too high for the Federal Reserve, which is the US central bank, to consider cutting US interest rates right now, but at the same point, it's not high enough to cause those real alarm bells within the US central bank that they need to either increase interest rates further, which would be a huge shock, and at the same point to rule out potential interest rate cuts for the rest of this year. I think that now we really need to look for what the consumer price index, which is the CPI data, suggests today. But all eyes are certainly on the United States economy this week. It does represent the greatest global equity market value when you look at market capitalization, which is why all eyes of investors are on the US stock markets and US economic data for this week overall.
Well, Jameel, also making headlines this morning is the US Fed Chair saying how inflation is surprisingly stubborn.
Exactly that. And when it comes to the Federal Reserve and the US Central Bank specifically, actually, we always look at the devil's in the detail. And some of the details that were given in that message there was that inflation is stubborn, but yet he also called the PPI report mixed rather than something of a concern. So it still suggests that the Federal Reserve, again, the US Central Bank, are in line to start cutting US interest rates at some point later this year, but not as much as the market expected. I think we're having a little bit of a reality check for global markets, which is why there is somewhat of a more muted volatility. Because as we headed into 2024, financial markets are pricing in roughly 140 basis points of interest rate cuts, which is somewhere around 1 to 1.5%. But right now, we're looking at somewhere between 25 to 50 basis points, which would be 0.25 to 0.5%, which suggests that the Fed might pull the trigger once or twice over the second half of 2024, which I think is a lot more of a realistic standpoint from the beginning of the year. And we now are waiting now for those signals from the Fed policymakers, and really the statements are going to continue to be monitored very closely.
And Jameel, we are now halfway through the trading week. What are traders going to be looking out for today?
Today, again, all eyes will remain in the United States economy. That's because we have the CPI. Again, that's the consumer price index, which is pretty much the main event to yesterday's PPI, the producer price index. We are expecting a figure somewhere around 3.4 to 3.5% on an annualized basis, which again is going to be higher than the 3% numbers we were expecting a few months ago. But at the same point, it's still as much as 2/3 lower than the peak of 9% from 2 years ago, which is why the Federal Reserve increased interest rates at the highest pace in a generation. But we also have retail sales. Usually we don't speak about retail sales as a tier one data risk, but for the United States economy, it most certainly is, because consumer spending accounts for the greatest component of the US GDP. So it does really show how the momentum is faring for the second quarter of 2024.
Jameel Ahmad, as ever, thank you very much for your insight.